Hello, this is Chris from the TraderGuy.com taking a look at the markets on November 12th. In front of you is the CAD yen pair, and you can see I've got a couple lines on this chart, just simply marking out a nice consolidation area that we're stuck in. I like this trade because it's simple. This is the type of trade, though, that newer traders won't be involved in because they think it's too simple. They think it's too obvious. But it's okay for a trade to be obvious because you need other people to push the market in your direction. It should be stated that this range, it's 200 pips. It's not a huge range, but it's been reliable lately. You can see that we go back and forth, back and forth. Um, Invariably, though, when I start talking about range trading like this, somebody will ask me the question, what about when it breaks out? And my question back to them is always the same. It's like, well, what happens when it does? Really? I mean, who cares? It happens. So, looking at this chart, as we're developing a range, you know, the idea is to try to get two or three or four trades or whatever as you sell at the top and buy at the bottom before you're eventually stopped out, or maybe the market runs in your favor. But either way, even taking the worst case scenario of being stopped out, maybe you get three positive ones and one loser. Well, net net, you should be coming out on top. Um, if you lose 100 pips on the loser and you gain, say, 150 on the winners because you're trying to play the range, well, I mean, you're already up um, for 350 pips. Sorry. So if I came to you and said, "Hey, I know how you can make 350 pips. Would you be interested?" Well, yes. You wouldn't be concerned about that one loss. Well, you have to look at it the same way. Also, you have to look at these type of situations as paying for a little bit of information. Every time you put money in the market, you're speculating that a particular area will hold as support or resistance. You are essentially putting some money out there, and you are paying for that information. And what I mean by that is let's say that we take this hammer that's placed right where you want to see it at the bottom of this area, and we go long. And then at that point in time, we get to the top, we close out our position, and we immediately short it. The reason being is we think that the consolidation will continue. Well, for the sake of argument, let's say that it doesn't and it goes higher. What's happened is that you have taken your profit on this trade. You've put a little bit into the market here, and you've gotten stopped out, maybe 50 pips, 60, whatever your stop loss is. It shouldn't be much. Well, you have paid that little bit of money for information that's quite valuable, actually. It's a 200 pip range. It's a rectangle. You break out of the rectangle, you expect to see 200 pips or so, which is about 83 in this case. Well, if you lose 50 here, there's still 150 pips to get. Again, this is one of those situations where I will pay 50 pips all day long to get the other 150. You have to keep in mind the object is to make money in the end, not to be right every time. And that's what makes this trading environment wonderful, if you can get your head around it. Now, fundamentally speaking, we have a situation where Canada exports oil. Oil has stabilized a little bit. It's fallen quite a bit. But what's interesting is unlike the Canadian dollar against so many other currencies, it really hasn't budged much against the yen. So this shows how fundamentally weak the yen is in comparison. Plus, you have to keep in mind that, and when I say fundamentally weak, I'm speaking more or less in short term, not longer term, because everybody's buying the yen overall. But you also have to look at the situation in Japan right now. There is a lot of political pressure for the Bank of Japan to continue to ease. If they go into further quantitative easing, that should weaken the yen as well. The Federal Reserve is printing money quicker than quicker than anybody probably would have ever thought, and because of that, the dollar yen may not be the way to play it. But CAD yen is a totally different story. While Canada is a softer stance than it once was, it does not have an easing policy. Also, again, oil is stabilizing. So, all things being equal, this pair should eventually grind higher, and it makes sense that we got this hammer on Friday, and especially now that we got bad numbers out of Japan, suggesting maybe a mild recession. And as such, and that was last night, and as such, we could see another jump higher. Ultimately, where does the pair go? We don't know. But we only play in this particular situation in this area here for now. And if it breaks out and goes farther, then so be it. Hopefully, we're still in the trade. And if we're not, we can always re enter it later. Anyways, that was the November 12th chart of the day. And remember, if you have any questions, just email me at chris@thetraderguy.com, or better yet, come to my forum at thetraderguy.com, educational forum. It is free. There's hours of videos, and I'm always there to answer your questions. Thanks a lot.